Welcome back to RER Deals of the Week. I'm Jeff.
I'm Ankit.
We're here for the week of October 12th through the 19th, bringing you deals from Newark and Jersey City, as well as some other Hudson County municipalities. Ankit, what do we have this week?
All right, we're going to jump over to Hudson County. We're going to start talking about a few more new markets, and we're trying to bring you guys some more analysis in other market spaces, and we're going to expand that today with Hoboken for the first time. Before we jump in, I'll go through the key assumptions. 100% of list price, 5% is the interest rate, insurance is $1,500 per year, 7% management fee, $50 in maintenance per unit per month, utilities $2,500 if they are combined, $1,200 if they are separated, 25% down payment, and 7% vacancy factor. Now, these will vary, especially in the Hoboken market compared to the Jersey City market, and I'll explain it to you. So let's jump into Hoboken. What do we got for you? Multifamily, 3-family deal. Asking price $915,000. Seems like a lot. I understand that. The value on this is the fact that you can get a 7 cap in this market. 7 cap is a rare find in uptown Hoboken. So you got that ability. You got some upside in rents. It's 2 bedrooms across the table. Stabilized, you're going to produce a 7.1 cap. That is $65,145 a year. In net income and your cash flow, if you leverage it, it's going to produce you 8.4%. That's $20,000. But you're going to need $236,250. So it's a heavy capital investment, but you got Hoboken's market, upside appreciation happening, a lot of redevelopment in the uptown location, so it's definitely worth considering. And you can eventually convert these things into separate condos. That's a play that you can look at. We haven't analyzed it as such, but that's an alternative exit for you. So you get paid up to 7% a year on your money if you buy it all cash, or 8.4% if you leverage it, and get the ability to exit on the other side, potentially at a much higher rate of return if you condo convert it. So that's Hoboken. Jump back over to Jersey City. Got a 3-family property for you, so both are dense units this time. $475,000 asking price on Nelson Ave in the Heights. Heights markets typically now trading at the 7 to 8% number, given the fact that U.S. Masters Fund, a big buyer in the market, has really compressed that market down and brought the cap rates at a much lower level than previously. So 7 to 8 is where your market's trading at. This one hits it right on the button. 8% cap is once it's stabilized. Approximately 8% cap. It's producing 7.7 with our assumptions, but if you lax off a little bit on the property management fee, you should hit that 8 cap pretty easily. That's about $37,364 a year. Your leverage return is 11.4%. with our assumption of 5% financing. Now remember, that's high in the market today, but we keep it conservative for you. So when you analyze it, you may get a 4% rate, and that's going to obviously give you a much higher rate of return. You're going to need about $126,000 to buy this property, leverage, so keep that in mind. Both deals are heavy capital investment, but both are in great locations. Both have some serious upside for appreciation. Remember, whenever you buy real estate or income-producing assets, 2 components to returns. The current yield, which is the income, and that's what we really care about, and that's what we really promote. But there's the other side that you got to keep in mind is the appreciation or the potential for appreciation. Both those together truly make your return. On our side, we really believe in the income, but we want to bring you some deals that consider that appreciation upside, and I thought this was what we brought you this week. That's Hudson County's market, Jeff. What do you got going on in Essex County for these guys?
Very good. Over in Newark, we have 2 deals this week. Just to run through the assumptions very quickly first, the only difference you're going to want to take note of for the assumptions that Ankit explained over in Jersey City and Hudson County are the fact that we up the management fee a little bit in Newark just because it's a little bit more management intensive, and that's what the market provides for, as well as the vacancy rate is slightly higher as well, just again because of the market. So those are things that you want to keep an eye on. Different markets do trade differently, so those are things that we're constantly keeping an eye on, and you're going to want to do the same if you're involved or looking to get involved. You can't just make broad assumptions across the whole area. The first deal we have here is on Mapes Ave. This is a 3-family. It's a short sale. We usually don't bring you short sale listings. However, this isn't a pre-approved short or an approved short sale. It was previously approved at a $140 price. Now it's come back on the market at a $90,000 list price. That's a great deal. I don't know that it's actually realistic. It may just be a drop price to generate some interest. So we did break the assumption on this one. I analyzed this at a $125 purchase, what I think is realistic. It needs a little bit of work. We put in a $15,000 rehab budget. However, it has been updated previously. There are 2 tenants in place, and the other unit I did at a slightly lower rent roll to justify the little bit of rehab needed. So that could be brought up as well. So conservatively, we're looking at about a 13 cap on this investment at this price. It's a great price. The area is decent. You're near the park and the medical center. You have parking. This is a more family oriented area. With a mortgage, we're looking at almost a 25% return on your money, which is a great deal. I think this is a pretty good deal. Next, we're going to bring you South 8th Street. This is a typical deal like you see in this area, the standard 3-family, 3-bedroom, 1-bath units, standard style. This is listed at $120. It is not a short sale, it is not distressed, and it is fully occupied. That makes it a deal of the week. The occupancy is at $950, $950, and $900. So these are okay rents. They definitely have some upside potential. However, I'm assuming it probably needs a little bit of updating as well, although it is occupied. So this is a great strategy. As the tenants turn over, you can come in, do those upgrades, up the rent roll, and really increase your investment potential there, get some value add, and then compress that cap rate down. Currently, it's trading like the other deal at a 13 cap. With a mortgage, we're looking at about a 26% cash-on-cash return, and again, that's as is using our assumptions. So this is a cash flowing deal, tenants in place. To me, that's the deal of the week in Newark.
Jeff just brought you a great deal in Newark. I think it's a great deal. South 6th Street, fully occupied, ready to go. I think that's definitely the deal of the week. From my side, I like the Hoboken trade, even though you get a little more upside on the Jersey City asset, but the Hoboken asset is definitely a lot more money to put in. But if you're going to be spending over that $100,000 anyway, try to see if you can syndicate the rest of the capital and get into the Hoboken market, because that market is hot right now. And it's probably going to stay hot for a very long time. So those are our deals of the week. I'm Ankit.
And I'm Jeff.
Look forward to seeing you guys next week. Tune in next week as we cover more markets. We're going to keep expanding our market base to give you guys more deals of the week in newer markets as well. Thank you so much. See you guys next week.